Welcome to weekly view on markets. Despite volatility, the markets have done well during this week. Nifty has closed this week with a gain of 2.27%. Nifty is at 17,576. Bank Nifty was the leader during this week. Bank Nifty gained 3.76% during this week. Mid cap index gained about 0.55%. Small cap index gained about 1.42%. So we have seen the Nifty and Bank Nifty, that is, large cap stocks were leading the market. There was slight underperformance in mid and small cap during this week. FIIs have bought on certain days during this week. That is why we see a bigger rally in the leading stocks, that is large cap stocks. India VIX, that is volatility index, is at 17.28. The volatility index has cooled off by about 1% during this week. That shows that fear is receding in the market because companies have been posting very good quarterly results, which we will discuss a bit later. Let us look at performance of different sectors during this week. Bank Nifty was the leader, and among the banks, PSU banks gave a stellar rally during this week. PSU bank index was up more than 10.9% during this week. Private banks also rallied by more than 3%. Oil and gas stocks also rallied by around 3.4%. All other sectors were in the green and gained between 1 to 2.5% during this week. Few sectors were in the red marginally. Media sector was down by 0.89%. Consumer durables stocks were down by about 0.44%. Metal sector was down by about 0.4%. So overall, this week was a good week for the markets. Now let us look at technicals. Let us look at the charts. This is the daily chart of Nifty. Nifty has closed at 17,576 on Friday. I have drawn the support line connecting the recent low at 15,100. From there, Nifty has rallied, and if we look at this short-term support line and comparatively medium-term support line, they are intersecting at around 17,400. So technically, 17,400 now will be a good support for Nifty, and 17,800 level seems to be a resistance for Nifty. I have drawn the line from all-time high of Nifty at 18,600. From there, if we see this long-term resistance line, whenever Nifty has gone above this resistance line, we have seen selling coming in the market, and Nifty is dropping down. So 17,800 is a critical resistance level. If Nifty takes off this resistance level, then it can easily go to 18,000 level and go higher. And when it crosses 18,000 level and If it sustains above 18,000 level, we will see a good rally in Nifty in coming months. Let us look at weekly chart of Nifty. The weekly chart also supports what is discussed on the daily chart. This is 18,000 seems to be the resistance line on the flag. If it crosses 18,000 and sustains above this, the weekly chart also gives a big target for Nifty in coming months. Now let us look at Nifty mid cap. The Nifty mid cap index is also showing similar uptrend, and it has closed above the resistance line, and Nifty mid cap index is also likely to go higher in coming weeks. Let us look at Nifty small cap index. Small cap index has closed at around 9,600 levels. So this 9,600 level is a very significant for Nifty small cap index, because in 2018 Nifty small cap index touched 9,600, and from there it corrected, and it has made 2 to 3 attempts to go above this level, but it has not sustained. So this is a crucial level for Nifty small cap index, and if this resistance is taken off, then there are good chances that Nifty small cap index will also go higher in coming weeks. So if we see that from 2018 to 2022, it is almost 4 years, and many quarters have gone by, and the companies have reported profits in all these quarters. So this is the reason I have been discussing that a small cap sector has lot of value, and there are very good companies, and it is time to pick those small cap stocks which will give very good return in the coming years. Let us look at Bank Nifty. Bank Nifty has touched 41,600, and now it is almost at around 40,700. So Bank Nifty is likely to touch all-time high in coming week. The reason is that I have been maintaining that there is revival in the banking and financial sector, and they have been reporting very good profits. And in future also, we have got good earning visibility in banks. This is the reason that Bank Nifty is likely to perform better in the coming weeks. Now let us look at some of the fundamentals of the market. Indian economy and markets have been relatively doing well comparing to the global turmoil. Most of the global economies have problems due to high inflation and supply chain constraints due to the Russia and Ukraine conflict. Despite the global headwinds, we have seen resilience in the Indian market on a year-to-year basis. That is from last Diwali to this Diwali. Indian markets have corrected by around 2% only. The Nifty all-time high was 18,600. Now Nifty is at around 17,600 level. So we have seen hardly any correction in the Indian market. Even though the year has been volatile in between, on a year-to-year basis, Indian markets have not seen a big correction like many other markets like US or Europe or even some of the emerging markets. The Indian market is deriving its strength from the macro and micro fundamentals. The Indian economic parameters, that is macro parameters as well as microeconomic parameters, have been comparatively sound comparing to many other countries. So Indian economy is on a growth path. For the current financial year, the GDP growth has is expected to be around 7% despite the global headwinds. There has been good coordination between the government and RBI. RBI has been highly effective in controlling the inflation, providing liquidity to the markets, and also supporting the growth in the economy. The good coordination between government policies and RBI has resulted in sound fundamentals for Indian economy. And this has resulted in improved balance sheets of the companies. Corporate sectors have has been able to manage their balance sheets well. They have reduced the debt levels, they have reduced leverage, and many of the companies we see the promoters pledged share percentages have been coming down. So these all factors indicate a good growth for Indian economy as well as for markets. Quarterly result season is on, and most of the leading companies have announced their results. We have seen good results by banks and financials. They have overcome the NPA issues, bad debt issues, and provisioning has come down. So, because of all these reasons, banks have been posting very good results. NBFCs and other financial companies also have been posting very good results. IT and IT sector, IT enabled services. Companies also have posted results in line with street expectations. Bigger companies like Infosys, TCS, Mindtree, Wipro all have posted results in line with the street expectations. Manufacturing companies, that is, the manufacturing sector has shown growth in revenues and in profits. After many years of sluggish growth in manufacturing sector, this sector has started reviving and we are seeing growth in revenues and profits of manufacturing companies. Insurance companies have done well. HDFC Life, SBI Life, ICICI Lombard, all these companies have announced their results which have been good. FMCG companies like ITC, HUL, Britannia have reported higher sales, but they have taken a hit in their margins and profits as they are affected by inflation. Reliance has announced their results at the weekend. The O2C sector segment, that is the oil and gas segment of Reliance Industries, has been hit by windfall tax, lower GRM, and to some extent inventory losses due to high volatility in the crude price. Most of the oil companies are expected to report weak quarter results during this season. Cement companies generally have a weak quarter during monsoon as their sales will be lower and revenues will be lower as construction activity will be hit by the heavy rains during this season. Cement companies have reported lower revenues and profits. As expected, their profits are down. Pharma companies have reported kind of mixed results. Some companies have reported higher profits, but other companies' revenue and profits are down. On the whole, the quarterly results looks good, and in the coming quarter, that is from October to December, the results will be even better as economy is picking up and most of the sectors have started reviving, and we can look for earning growth in coming quarters. So this is a good time for investors to pick up stocks with 3 years view, and also mutual fund investors can invest lump sum money at this point of time, and those who are doing SIP, they should continue. Most of the SIP investors have not seen good returns for last 1 year as markets are consolidating in a range. But whenever there is correction in the market, those people who are doing SIP have a chance to accumulate higher number of units because when the market corrects, the NAVs will be lower and mutual fund investors are able to get higher number of units. These higher number of units accumulated during the market correction will give big returns when the market picks up. So mutual fund investors should continue their SIPs. We can look forward for better market levels in the coming year. So this year to next year, the Diwali, definitely we should expect better returns for investors in mutual funds and also those who are directly investing into stocks. Wish you all happy Diwali and prosperity in the coming year. So if you like the video, please share with your friends, like the video, and subscribe to the channel. This is all for this week. We'll meet next week again. Thank you.